For your US company, one of the most important early decisions you will make is choosing between cash basis and accrual basis accounting. This video is your practical guide to choose the right method from day one. So, what is cash basis accounting? It records revenue only when money hits your bank and expenses only when you pay them. For example, imagine you are an Amazon seller. Amazon may approve your sales today, but the payout actually arrives 2 weeks later. Under cash basis, the revenue belongs to the moment the payout lands, not the moment the customer buys. The biggest benefit is clarity. What you see on your books is real money and not promises or future payments. The downside becomes visible when you start scaling. E-commerce sellers often run ads, buy inventory, or launch campaigns in 1 month, but they receive payouts in the next. This can make your financials look misleading unless you understand the timing. So, what is the alternative method, which is accrual accounting? It records revenue and expenses when they are earned or incurred, regardless of when cash moves. This gives a more accurate picture of your operations, especially if your business involves subscriptions, delayed payouts, or inventory. Let's take a SaaS founder as an example. If a customer pays you $120 for an annual plan, accrual does not count all $120 today. Instead, it spreads the revenue across the next 12 months. This is what investors want to see because it shows the real behavior of your customers and the stability of your business. By the way, most small US companies can choose either cash or accrual as long as the revenue is under the IRS threshold. For now, small businesses can use the cash basis method if their average annual gross receipts for the past 3 years are $30 million or less. But your business model shaped the recommendation. So, if you carry inventory as part of your core operation, the IRS often expects accrual even if you are small. If you run a SaaS or subscription business, accrual provides the reporting structure investors may expect. If you are a freelancer or service provider, cash basis keeps your workload minimal and usually fits your needs. Once you file your first tax return with one method, you must stay consistent unless you formally request a change. If you are unsure which method suits your US company best, our bookkeeping team can help you make the right choice.